Hello everyone, welcome to my video lecture on deduction under section 80C, 80CC, C and 80CCD, 80CCE of Income Tax Act. So we know that once the total income is calculated, considering the income from salary, house property, capital gain, business and professional and other sources, gross total income will be arrived. But the assessee need not pay the tax on gross total income. Certain deductions are available to the assessee depending upon the investments or savings done by him. So all these savings and investments are classified under various sections, and section 80C is one important among them. So let us discuss 80C section first. Section 80C is one of the most popular sections among taxpayers as it allows them to reduce taxable income by making tax saving investments or incurring eligible expenses. Section 80C deduction can be claimed only by individuals or by Hindu undivided family. That means companies or partnership firms cannot avail the deduction under Section 80C. Now, the maximum limit for deduction available under Section 80C is 1.5 lakh. That means if a person has made the investments valued rupees 1,80,000, he cannot claim the deduction of 1,80,000 fully because as per the income tax rules, it is restricted to the extent of rupees 1,50,000. So let us go through the various provisions, that means various investments or savings through which the SSC can claim deduction under Section 80C. So here you can see the list of various investment avenues or expenditures which are covered under Section 80C. The first important thing is recognized provident fund. Let me explain the provident fund, different types of provident funds together. Here we can importantly say that recognized provident fund, unrecognized provident fund, public provident fund are the major popular provident funds. Among these, if the assessee contributes any amount to recognized provident fund or public provident fund, he can claim the deduction in Section 80C, but he cannot claim deduction for contribution made towards URPF, that means unrecognized provident fund. In addition to this, the main important expenses which can be considered for Section 80C is life insurance premium. That means if the assessee pays the life insurance premium on his own life or on the life of his spouse or children, then he can claim deduction for that. But the important thing to be noted here is that he cannot claim the deduction for LIC premium paid for concerned with his parents. That means if he pays the LIC premium of his father or mother, he cannot claim the deduction for that. And there is a restriction towards the amount also. If the LIC policy is purchased after 1/4/2012, then he can restrict the deduction for LIC premium to the extent of 10% of the policy. That means if he has paid more than 10% of the policy amount as the LIC premium, he cannot avail the full amount of deduction. It should be restricted to the 10% of the policy amount. If it is for certain LIC premiums, it is restricted to 15%. Along with that, equity linked insurance scheme, national savings certificates are the important deductions considered for Section 80C. 5-year fixed deposit in banks, like if the amount is deposited in nationalized banks, scheduled banks, etc., for the period of 5 years, then he can claim deduction towards that. But instead, if we deposit the amount in for 5 years or 10 years deposits made in any cooperative bank, cooperative society, then he cannot take the benefit of Section 80C. Along with this, one more important point to be considered is tuition fees paid for the two children. If the assessee pays the tuition fee, that means the school fees of his children, he can avail the deduction to the extent of maximum 2 children. But this tuition fee means only tuition fee. It does not include the uniform fees or the fees which is paid for the vehicles or books, etc. Then, Sukanya Samriddhi Yojana, which is the most popular scheme which is introduced by the central government for the girl child And if the parent or if anybody deposits money in SSY, Sukanya Samruddhi Yojana, he can avail the deduction for this. Apart from that, ELSS. If ELSS notified pension scheme of UTI and deposits in senior citizen savings scheme, contribution towards unit linked insurance plan, then LIC mutual funds are the few important other deductions considered for Section 80C. And if the assessee repays his housing loan, then this repayment amount may constitute two components like principal amount and interest amount. This principal amount, whatever he has repaid, can be availed as deduction under Section 80C, whereas interest cannot be availed under Deduction 80C. It can be considered under Section 24 while computing income from house property. This here we have taken one example. We can see the screen that a person has made contribution of 50,000 to PPF, 40,000 to ELSS, and LIC premium of 30,000, and contribution of 30,000 to Provident Fund. And if the amount which he contributed, if it is totaled, if it is more than 1.5 lakh, the amount should be restricted to 1.5 lakh. Now let us go through the another important section, that is section 80 CCD1, that is contribution to new pension scheme. Here the contribution made by the assessee himself towards the NPS, then he can avail deduction under section 80 CCD1 to the extent of 10% of salary or 20% of gross total income. Means depending upon if a person is self-employed, then he can claim 20% of gross total income. If a person is salaried one, then he can claim 10% of the salary. Section 80 CCD1B, that is the additional contribution made by the assessee towards NPS. Apart from 80C, he can claim additional deduction of 50,000 which is contributed towards NPS. Deduction under section 80 CCD2. This is nothing but employer's contribution towards NPS. Suppose if a person is working in a company and the company itself contributes certain amount to his NPS account, then he can avail the deduction under section 80 CCD2 for the employer's contribution to NPS. But after learning all these things, we have to remember two important things. That is the total deduction available together, that is total deduction available considering 80C, 80CCC, 80CCD together should not exceed 1.5 lakh. That is the one thing we need to remember. And the second thing is that this deduction is not available under new tax regime. That means if the assessee is following old tax regime, he can claim this section 80 deductions. If he is following new tax regime, all these deductions are not available to the SSE except one, that is 80 CCD2, that means employer's contribution towards NPS. But to claim that, he has to include this employer's contribution to NPS first in his total income, then only he can claim the deduction. This is all about this lecture. Thank you.